I wanted to talk for a second about an article that came across my desk that I thought was kind of interesting. Interesting in the way they take it and interesting in the way then I view it. So the article is called 4 Things You Should Do to Protect Your Business During a Recession. Presumably this is something they're thinking is maybe an imminent issue that could be coming up, that the US could be heading into a recession. Personally, I don't think that's the case. But what's interesting to me is the 4 things they tell you to do if the economy was headed to a recession to help protect your business are things I think you should be doing no matter what. Even if times are good, even if things are going well, even if you have plenty of growth in your business and you're not worried about a recession, these are all things you should be doing anyway. So their tips are strengthen customer relationships, optimize cash flow management, enhance operational efficiency, and invest in employee engagement. Well, okay, yes, if I'm heading into a recession, I definitely want to make sure that I've got my customers locked in. Hopefully they love me. They're not going anywhere. Even if times get tougher, I won't be one of the costs that they cut. I want to make sure that I'm collecting on invoices and have terms with my vendors so I have plenty of cash and I've got a cash cushion and I have good margins. And I want to make sure that I'm not wasting money operationally. I'm not doing things in a wasteful way. I'm being as efficient as I can. And I want to make sure that I'm minimizing my employee turnover. I have them doing their best work, engaged and optimistic about the future and wanting to stay and not look for other work and not be disappointed in how much I'm paying them or how well I'm training them or what growth opportunities I'm giving them. But those are all good things to be doing no matter what the economy is doing or what the business is doing. Those are all good things to do regardless. And that way, even if there is a recession coming, you're not scrambling trying to do these things. You've already got them all in place. It's a lot like when people say, what should I do to get my business ready to sell? Well, these are all the same things. You should, be delegating work and be running things with a management team instead of having the owner doing everything. That hurts the value. You want to get rid of old inventory you haven't sold and, cancel software subscriptions you're not using and make sure your staff is right-sized for the size that you are. You don't have fewer people than you need and you don't have more people than you need. You want to make sure you don't have a high customer concentration where one customer is 20 or 30 or 40% of your revenue, right? Because if that customer leaves, you're going to be in big trouble. So those are all things you do before you sell to try and make your business look as good as possible. But they're also things you should do anyway, no matter what, even if you're not planning to sell the business for another 5, 10, or never number of years down the road. So it's the same thing with things you should do to protect your business in a coming recession are things you should be doing anyway. So the article I think is helpful, I guess, and these are reminders of things that you should be doing to make your business run as well as it can. But it shouldn't just be about getting through a recession. You should always be doing these things as a business owner, always working on optimizing the business, optimizing cash flow, optimizing customer relationships, optimizing employee relationships. Those are all good things to be doing all the time, no matter what's coming. If you're not doing them now, put them on your to-do list, regardless of whether a recession is on the horizon. Start working on them. And, small incremental steps, small improvement every day gets you to where you want to be in the long term, no matter what happens.
Be a small business owner, you also have to become a tax strategist these days. I don't care how big of a spender you are, you can't outspend what the IRS is going to take. The more money you make, the more money they take.
Yeah, there's a lot of people out there with sort of an anti-IRS, anti-tax standpoint. And yes, nobody likes paying taxes, but you don't have to become your own tax strategist. The IRS tax rule book is thousands and thousands of pages of very complex, dense, obscure rules and regulations. Trying to learn all that and become a master of tax is a career in itself. You can go and get a CPA license if you really want to learn tax to the extent that you know it all yourself. I'd say a much better strategy is to hire a competent tax service provider who can help you with that and make sure that they've minimized what you're paying each year. But the truth is, there's not a million loopholes to figure out, and if you're really smart, you end up paying almost no tax or no tax every year. Very few people can actually pull that off legally. And for most business owners, the deductions are pretty straightforward and the tax is what it is. The way to overcome that is to continue to grow your business so that it makes enough so that even after you pay the taxes that you legally owe without getting yourself in trouble, or you're signing up for dodgy tax shelters, is that there's still plenty left over to fulfill all your financial requirements, your needs, your wants, whatever you've got, and not have to worry about it, right? So that's really the key to success, is to continue to grow the business so that even after you pay the taxes, you don't have to worry about it. And rather than becoming your own tax strategist, which this guy doesn't strike me as a tax strategist. I don't know what his business is, but it doesn't seem like that's probably how he spends all his time learning tax. I suspect that he probably has a very good CPA that he leans on for tax advice, and that's what 99% of all other small business owners do as well, rather than becoming their own tax strategist.
You know how rich people say to spend other people's money? Let me give you an example of what that actually looks like. I grew up really poor, and I was taught that talking about finances is trashy. It wasn't until I got around rich people that I realized they talk about money all the time, with their friends, with their kids, and they have plans to keep everything secure. One of my mentors has some special kind of life insurance policy that he can pull money out of whenever he wants. He bought it when he was 18, he paid $200 a month, but whenever he needs to make a big purchase, like a house or inventory or a car, he pulls money out of this account, makes his big purchase, puts it to work for him, it starts making money, and he pays himself back into that account. No interest, no banks involved. On top of that, he has 2 sons. When they were born, he bought them each one of these accounts, and when they turn 18, it's going to be their graduation gifts. Now, they're starting life with access to this kind of capital. Meanwhile, in families like mine, we're teaching work hard, save hard, and maybe someday you'll be lucky enough to be able to afford a car in cash. Like, it's wild.
Yeah, okay. Well, it's funny that she's giving advice about whole life insurance, and at the top of the screen it says, not financial advice. Well, my not financial advice is stay away from whole life policies. One, they're one of the highest commission financial products that you can find out there. People who sell insurance products and financial products love it when people buy whole life policies because they make huge commissions. Anytime somebody's getting a huge commission, you have to think their advice may be a little skewed as to whether or not it's really a good idea for you. In fact, I would say if you compare all the different financial products, whole life policies are near the bottom of the list. There's much better ways to save and invest and grow your money. And I don't think it's trashy to talk about money at any level. It's trashy to talk about what you bought with your money or how much money you make compared to other people. But it's not trashy to talk about what are good ways to save and invest and grow your wealth and build wealth over time and set aside a cushion so you have money for emergencies and be able to afford things later in life and be able to retire comfortably. None of that's trashy. But it is kind of trashy to make a TikTok talking about a financial product with a big banner across the top that says not financial advice, where you're giving financial advice about a financial product that is a terrible decision, in my opinion, which I guess is financial advice. Although, don't go out and not buy a cash life policy based on this either, right? Talk to an actual qualified financial advisor and consider whether or not their advice is free, in which case it probably means they're earning money from commissions, or if you're going to a fee-based advisor who's probably giving you the best advice because you're paying them regardless of what you buy from them. So there's my financial advice that's not financial advice. Don't listen to this. At least consider all the options and understand what you're getting into before taking advice directly from a TikTok.
Running a small business is the best way to pay $0 in taxes and also keep more of your hard-earned money. As an employee making $100,000 per year, you're going to be paying about $14,322 in federal income tax. If you purchase a car worth $50,000, you'd be paying $900 a month as your car payment. And unfortunately, we can deduct this as a cost. You still have to pay your mortgage, phone bills, utilities, etc., and that comes up to $48,000 for the year. So our total net income after paying for taxes, car payments, bills, etc., comes out to $26,878. Now let's take a look at a small business owner. So we have $100,000 in income, but unlike a W-2 earner, you can use deductions like your home office deduction, phone bills, travel, meals, etc. to reduce our income even more. But we're not done. We're going to use section 179 plus bonus depreciation to write off your vehicle that weighs over 6,000 pounds. We purchased it with $0 down, but we're still able to take a massive write-off of $40,000, bringing our taxable income down to $23,000. Now last but not least, we're going to be paying our kids $11,500 a year each. They don't have to pay any income taxes on that because it's below $12,000, and we get to use it as a write-off for our business. So after all these deductions and tax savings, the small business owner ends up paying $0 in taxes, keeps more money, and also gets to help out their family along the way.
Great. Well, TikTok is always where I go for tax advice because definitely there's nothing wrong with what he's saying here at all. Unless you stop and consider that you can't just write off a car because you had your business buy it. It has to actually have a business use and you have to be using it 100% for the business. And if you do that, by the way, when you have your business buy your vehicle instead of you personally, your insurance rates can be up to triple what they were for you personally, because your business has a different perceived use and a different risk profile than you driving a personal car for personal reasons. So yes, if you meet all the criteria, you can write the car off as a business expense and take that deduction, but then you have to only be using the car for business, and you have to pay 2 or 3 times more in insurance than if you bought the car personally. So there are other ways to do it. You can own the car personally, track your miles that are business miles and deduct that. Yes, you can do that, or track actual expenses paid for the business, gas, insurance, repairs, maintenance, etc., and deduct that. But it's not an automatic write-off the way he's suggesting. The other thing is you can pay your kids, but they have to actually be doing something for the business. You don't just give them the money. And then if you're paying your kids the money, then you're supposed to have the kids get the money, not just put their names on the checks and then you take all the money back. So these are not ideal tax strategies in that there's a lot more hoops to jump through than he's implying. And if you're not doing it right, then it becomes sort of tax fraud, and that's problematic. So yes, there are definite ways to save money on taxes as a business owner, but these are aggressive, borderline shady tactics that he's promoting here, and he's leaving out a ton of information about who and where it applies. So I would say, rather than getting some tax advice that you may or may not believe from TikTok, I would suggest talking to an actual tax person who can give you legitimate tax advice and help you find legitimate tax savings, so you don't have to lose sleep at night worrying about whether or not you're going to get nailed in an audit.